I'm Kyle Rodda. Well, it's often said that the Fed hikes until something breaks. In this week's Investor Spotlight, we discuss the failure of Silicon Valley Bank and 4 stocks to watch as the turmoil unfolds. The crisis at Silicon Valley Bank has its origins in the US Federal Reserve's hiking cycle. As any trader would be well aware, the US Federal Reserve has been on a 12-month-long fight against inflation, which has seen the central bank hike its rates by a remarkable 450 basis points. It's proven to be one of the most aggressive campaigns in history, with market participants pricing in a non-trivial risk of a further 100 basis points of hikes to come. Silicon Valley Bank has been hit from 2 sides. On the one hand, it has been impacted by reduced liquidity in the financial system, just like any other bank, a situation that was exacerbated by the failure to hedge its interest rate risk. On the other hand, it has borne the brunt of a US tech sector that has slowed amidst the rise in interest rates as the economy adjusts from a very supportive zero interest rate policy regime to one where the cost of capital is much higher. The problem for investors now is determining whether the SVB collapse is an isolated event or one which signals deeper issues either in the US financial system or the US tech sector more broadly, which could have significant financial or economic implications. Here are 4 stocks to watch as the situation unfolds. Every financial sector stock struggled last week as investors took a shoot first, ask questions later approach to the crisis. JP Morgan, as America's biggest bank, is naturally one which has seen its share price fall. However, its stock is also being driven by reports that it could effectively bail out SVB by acquiring the company. JP Morgan shares plunged last week as the broader financial sector sold off before the stock found support around the 200-week moving average. Sellers have taken control of the price upon any push above $145 per share, while key support looks to be around $125 per share. Goldman Sachs is one of the worst performing Dow constituents on Friday amidst the broad sell-off in financial stocks. Goldman Sachs' sensitivity to the situation is more indirect. However, given the institution is more focused on investment banking, the issue for investors is whether SVB's troubles are indicative of a weaker investment backdrop for tech firms. Momentum has shifted to the downside for Goldman Sachs shares, with price breaking to the downside of an ascending wedge pattern. The stock has found support at just below $330 per share, but if that level breaks, a drop below $300 could open up. Resistance, meanwhile, is around $360 per share. Roku is one business that has direct exposure to SVB's collapse. It has already notified the market that it has $487 million held at the bank, which represents around 26% of its cash and cash equivalents. Roku shares have pulled back in recent days as the issues at SVB came to light. The stock is now testing upward sloping trendline support, which if broken may open a pullback towards $46 per share. The 50-week moving average is acting as key resistance right now. Another company with deposits tied up at SVB is Roblox. The firm disclosed last week that it has around $150 million or 5% of its total cash with the bank. The drop in Roblox shares has been modest so far. However, aside from the issues associated with SVB, the company's stock remains in a clear downtrend. In the short term, the price does appear supported by an upward sloping trendline. Resistance appears to be around $46, while support is at $33 and $26 per share.